There is a quiet rule in global finance. When the smartest corporations on Earth all start borrowing at the same time, they're not chasing growth. They are bracing for a war. And in 2025, that rule came alive. Not on a battlefield, not in politics, but deep inside balance sheets, bond markets, and server farms humming day and night. This is the story of how artificial intelligence triggered the largest debt expansion in big tech history, and why the consequences may shape the next decade of the global economy. Act 1. The year the numbers broke. In 2025, something extraordinary happened. Quietly, without headlines screaming panic, without the public fully understanding what they were witnessing. The world's largest technology companies, the architects of our digital lives, issued $120 billion in corporate bonds. Not to buy competitors, not to return capital to shareholders, not to survive a crisis, but to feed AI. Let that number sink in. $120 billion in a single year. That figure alone represents a 500% increase compared to 2024. Even more staggering, it exceeds the combined debt issuance of the previous 4 years. 4 years compressed into one. This was not incremental investment. This was acceleration. And acceleration in finance is rarely benign. Act 2. Why AI changed everything. Artificial intelligence is not software. It is infrastructure. It demands data centers the size of small cities, energy consumption rivaling industrial complexes, custom-designed chips costing billions before a single model is deployed. AI does not scale like social media. It consumes capital before it generates profit. And big tech understood something critical before the rest of the world caught on. Whoever controls AI infrastructure controls the next economic order. This is why Amazon, Google, Microsoft, Meta, and Oracle didn't hesitate. They didn't wait for profits, they didn't wait for regulation clarity, they didn't wait for macro stability. They went straight to the bond market. Because debt, unlike equity, is fast. Act 3. The bond market as a weapon. Corporate bonds are often misunderstood. To the public, they sound boring, safe, predictable. But to corporations, bonds are leverage. By issuing debt instead of selling shares, big tech preserved control. No dilution, no new voting power, no outsiders influencing strategy. This was not just borrowing. This was defensive positioning. In an AI arms race, being second is existential risk. And in that race, speed matters more than balance sheet purity. Act 4. 2026, the escalation phase. If 2025 was the ignition, 2026 is expected to be the explosion. Base case forecasts suggest that big tech will increase AI-related debt issuance by another 18%, pushing totals towards $142 billion. But that is the conservative scenario. There exists another projection, the one that keeps risk managers awake at night. A scenario where debt issuance surges to $317 billion, a 164% year-over-year increase. That is not investment. That is mobilization. At that scale, AI debt stops being a corporate issue and starts becoming a systemic financial force. Act 5. The hidden cost of borrowed intelligence. Debt is patient until it isn't. Interest payments don't care about hype cycles. Bondholders don't forgive missed projections. And AI, despite its promise, is still unproven at scale. Revenue lags investment. Costs arrive immediately. This creates a dangerous asymmetry. Cash flows are uncertain. Capital costs are fixed. Competition is relentless. And once debt is layered onto that equation, flexibility disappears. Big tech is betting that AI will monetize fast enough to justify the leverage. History offers mixed verdicts on such bets. Act 6, when empires borrow too much. Every technological revolution follows a pattern. Railroads, electricity, the internet. At first, capital rushes in, then excess builds, then consolidation follows pain. AI is no different, except for one thing. This time, the borrowers are already the most powerful corporations in history, which means if they succeed, power concentrates further. If they fail, shockwaves travel everywhere. Bond markets, credit spreads, pension funds, global liquidity. AI debt is no longer isolated. It is entangled. Act 7. The real question. This story is not about whether AI will change the world. That question is already answered. The real question is this: will AI generate returns fast enough to justify the most aggressive corporate borrowing cycle of the modern era? Or will history remember this moment as the point when big tech mortgaged the future to own it, only to discover that intelligence, artificial or not, cannot outrun economic gravity? Final thought. When corporations borrow this much, this fast, for something this uncertain, they are not investing. They are declaring belief. Belief that AI is not a tool, but a throne. And thrones are expensive.
Act 8. Looking beyond 2026. 3 possible futures. As we look past 2026, the story of AI debt begins to split into 3 very different futures. None of them are guaranteed. All of them are plausible. Scenario 1. The golden payoff. In this future, AI monetizes faster than expected. Enterprise adoption accelerates. Productivity gains materialize. AI becomes deeply embedded in logistics, healthcare, finance, and defense. Revenues rise just enough to stay ahead of interest costs. Debt, once seen as reckless, is later remembered as visionary. In this version of history, big tech didn't overborrow. They bought time, and time paid them back. But history rarely unfolds so cleanly. Scenario 2. The long grind. Here, AI works, but slowly. Costs remain high. Energy prices fluctuate. Margins stay compressed. Debt doesn't implode, but it doesn't disappear either. Companies are forced into capex cuts elsewhere, workforce reductions, quiet consolidation. AI survives, but the golden age turns into a decade-long balancing act. This is not collapse. It is stagnation with a smile. Scenario 3. The leverage trap. And then there is the darkest path. AI progress stalls. Regulation tightens. Global liquidity dries up. Interest rates stay higher for longer. Debt that once looked manageable becomes a cage. In this future, the AI arms race doesn't end with innovation, it ends with retrenchment. Projects are abandoned, write-downs follow, and the question shifts from who wins AI to who survives it. Act 9. The questions no one can answer yet. And this is where the story stops being about numbers. Because the most important questions remain unanswered. Not by analysts, not by CEOs, not even by the machines themselves. So we ask, what happens when intelligence scales faster than the economy that must sustain it? Can debt-driven innovation outrun financial gravity indefinitely? Are we witnessing the foundation of a new economic era or the early symptoms of another capital misallocation cycle? And perhaps the most uncomfortable question of all. If the most powerful companies in history feel compelled to borrow this aggressively, what do they see coming that we don't? Final open-ended close. strong retention ending. History teaches us that every technological leap demands faith, but faith, when financed by debt, becomes a wager. AI may well redefine productivity, power, and profit, or it may expose a simple truth we keep forgetting, that no matter how intelligent our machines become, the laws of economics remain stubbornly human. The future of AI is still unwritten. The debt, however, is already real, and the bill will arrive either way.
The bill always comes. History has never punished ambition. It only punishes mispriced belief. Every era has its promise. Every promise has its price. Today, that promise is artificial intelligence. The world's most powerful companies are not just building machines that think. They are borrowing against a future they believe will arrive in time. And maybe it will. Maybe AI will unlock productivity on a scale we've never seen. Maybe this debt will one day look small, even trivial compared to what it creates. Or maybe this moment will be remembered differently, as the point where intelligence accelerated faster than the system designed to sustain it. Because no matter how advanced our technology becomes, one truth remains stubbornly unchanged. Debt does not care about vision. Interest does not care about innovation, and time does not wait for narratives to catch up. The future of AI is still unwritten, but the liabilities are already signed. So the real question is not whether artificial intelligence will change the world. It will. The question is whether the world's financial foundations are strong enough to support the intelligence we are trying to build on top of them. The bill always comes. The only uncertainty is who will be ready when it does.